Anybody know my daughter's password? Fuck.
Dad.
Daddy bug. Good. Thanks, Emmy. Good to be here. I had to drive 3 miles. I love those kind of speeches. I thought maybe we could start off with a little audience participation this morning. By a show of hand, how many knows what the average cost of a gallon of gasoline is in America today? Okay. What is the base cost of an iPhone 10? Okay, pretty good. Where's the Dow Jones Industrial Average trading within 5,000 points? Okay, everybody knows. Where's Bitcoin trading within $5,000? Okay. How many kids dropped out of high school last year? Anybody know? And when you think about it, which of these questions or answers is a better leading indicator of how we're doing as a society? And by the way, the answer is 1.2 million. It's 1.2 million children dropped out of high school last year. And that's not the only big problem we face. And just think about it. While our public schools are failing to educate our kids for 21st century careers or even for college, 43 million families in America today are living on food stamps. 2.25 million people are currently living behind bars. 78% of America's working families live paycheck to paycheck. 1 in 4 families in America are severely rent burdened, spending over 60% of their income on rent. And the disparity of access to preventative health care in America is almost verging on criminal in this country. Now, one of the biggest problems, clicker, is not having a clicker. One of the biggest problems, if not the biggest, I think, is the disparity of wealth. Raise your hand if you believe that when 1% of a society controls 99% of its wealth, it undermines the very fabric of a healthy society. Raise your hand. I think you're all wrong. I do. The US was built on the disparity of wealth, and while it's more extreme today than it's ever been, capitalism requires disparity of wealth. This is not the United Socialistic States of America. Okay? Rather than wealth, what I believe we suffer from is a disparity of hope. That's the problem we face, because historically the 99% in this country would play nicely in the sandbox because they believed in the feasibility of the American dream, that with hard work, with great education, with affordable housing, with access to decent health care, you could become the 1%. I know that I believed in that, and I became the 1%. But today, think about it. There are millions and millions of Americans who feel foreclosed out from the American dream. They don't believe that there's a fair and level playing field, and how could they? Think about the single parent living in Baltimore, Maryland, working 2 jobs, spending 60% of her income on rent at the expense of food security, health security, retirement security. The probability of her son graduating from Baltimore City Public Schools is below 30%. The probability of her son ending up in jail by the time he's 35, greater than 50%. Where is there hope in that life? And of course, when hope disappears, the only thing that fills that void, I believe, is despair. And I believe it's the intensive despair that's driving the violence in this country. I also believe that it's driving the political circuses that we're seeing today. I don't think that a vote for Donald Trump was a vote for hope. I don't. I think it was a vote in defiance by tens and tens of millions of families who don't believe in the American dream. I think it's a vote in defiance of both parties, Republican and Democrat, who have failed to deliver upon false promises over the last 50 years, providing and enriching communities with hope. And by the way, we should have seen this coming. There's no doubt in my mind that our continued reliance upon the government and or philanthropy over the past 50 years to address issues like education, housing, healthcare, income disparity have actually handicapped our outcomes. I mean, time and time again, we've seen that while the government and philanthropy can, maybe treat and respond to issues, they are chronic failures at creating scalable, sustainable, durable solutions that stick. And I actually believe that in many instances, they're actually funding legacies of dependency. Now, in spite of all these challenges, I stand here today as an optimist. And I'm an optimist because I'm a true believer that daunting challenges can actually lead to generational opportunities, both financial and societal opportunities I like to call social impact investing. where we harness market forces to create sustainable, scalable, and yes, I'm not embarrassed to say, for-profit solutions to many of today's most pressing challenges. And for those of you who don't know me, I like to describe myself as Amy said, as an evolved capitalist, but I'm also an enlightened philanthropist. And I say that because for the vast majority of my career, I was both. I was a capitalist and a philanthropist, and I struggled. As a capitalist in the 80s, I worked for a guy by the name of Michael Milken at a firm called Drexel, Burnham Lambert. And when Drexel failed in 1990, myself and 3 other partners formed a firm called Canyon Partners, which we grew into a $25 billion hedge fund, one of the largest alternative funds in the world, and we created wealth. But over time, I began to struggle with that wealth. I began to almost have a moral discomfort that came from being in an environment where the sole metric of my accomplishments was wealth, where the equation was a net-sum zero game. For me to win, someone else had to lose. And I actually started to become self-loathing because I had always believed that, for me, wealth would lead to happiness. And what I realized very quickly in my 30s, that the older I got, the less correlation I saw between wealth and happiness. And for me, again, the only thing that wealth guaranteed was a more comfortable form of misery. Now, let's be serious. If you're going to be miserable, you might as well be fucking comfortable, right? So, I guess it was about 20 years ago when I was 35, I recognized my lack of balance. And I did what I went on a journey, what I call my 50 over 50. And what I did was I interviewed 50 people over the age of 50. They could have been bankers, money managers, teachers, policemen, rich people, poor people, famous people, not famous people, doctors, nurses, and even lawyers. But I will tell you, any lawyers in the office? Why did you feel the need to charge me for lunch, for just a little advice of how I could regain my balance? And I asked each of these people that I interviewed, are you happy? Were they happy? And if so, why? And if not, why were you not happy? And what I concluded from this exercise was that for me, happiness was a 4-step program. Number 1 was materialism. Okay? Let's start by agreeing that it's hard to be happy in survival mode. Okay? But let's also agree that that 4th car won't be the one that finally makes you happy. I came to realize that there was a diminishing marginal return on my happiness with stuff. So stuff was only number 1 on my list of things to make me happy. Number 2 is love. Now, most people say, well, love's the most important thing in the world. Really? I spend 80% of my waking hours pursuing my ambitions. Okay? Therefore, I am away from those I love 80% of the time. I cannot rely upon 20% to make me happy. So love can't drive my happiness. Now, I will tell you that the alternative can take your happiness away. Right? Think about it. There's 4 places you can be in a relationship. Number 1, happily married. That's an awesome place to be. Second best place to be, happily single. Third best place to be, imagine this, unhappily single. Worst place to be in life, unhappily married. And if you're unhappily married, that does transcend to every aspect of your life. But love was important, but not only number 2 out of 4 for me. The third, which I took away from my journey, was the opportunity to achieve. Not achievement itself, but the opportunity to get up every day and fight for something that I cared about. And number 4, which might seem peculiar for me, is the most important thing for me and my happiness was power. And not the Dr. Evil power to control and manipulate, but rather the power to have a positive impact on somebody else's life. The happiest people I met consistently were those who got to get up every day and fight a battle for the purpose of pursuing somebody else's happiness. The teachers and the policemen and the firemen and the healthcare workers, they were fundamentally happy. So I would say that in a desire to have a positive impact, I started moonlighting as a philanthropist. And unfortunately, I started struggling there too. And it wasn't with the moral discomfort that I had from making money off of other people's misfortunes. It was now an emotional discomfort that came from throwing money at other people's misfortunes. Because my wife and I gave lots of money to a number of organizations that were trying to tackle issues that were very near and dear to us. And we very quickly came to conclude that the vast majority of our money was really just putting Band-Aids on issues. We were treating issues. We were being reactive and not proactive. We were funding organizations that candidly weren't being held accountable. They weren't sustainable, they weren't scalable, and in many instances, they were just funding legacies of dependency. So 20 years ago, I concluded that if you want to treat a problem in society, then the government and philanthropy are fine. But if you want to cure, really cure, you have to harness market forces to create sustainable, scalable, and yes, for profitable solutions. And at that point, I did something that my wife thought was impossible of me. I think she thought it was impossible of most men, and that is I evolved, because men do not evolve. And I evolved from an investor whose sole metric of success was making money to an investor who believed that I could make money and I could make a difference in the world. I did not have to segregate profits and purpose. What I like to call as a social impact investor. Now, for those of you who are unfamiliar with the term social impact investing, let me start with what it's not. It's not an asset class. You don't say, gee, I have a portfolio of bonds and stocks and private equity and long short and real estate and social impact. It's not philanthropy, it's not the government, and most importantly, it is not an investment that sacrifices yield. Simply put, social impact investing is a strategy. It's a risk filter that recognizes that doing good and doing well don't have to be exclusive. Profits and purpose can play nicely in the sandbox. It's a strategy that focuses on marketplaces where there's critical mismatches between supply and demand of things like quality school seats, affordable workforce housing, how about breathable air? So all these things are where there's a huge existing mismatch between supply and demand and where the traditional investor has been who? The government and philanthropy. And again, I think they've had enough time to prove that they're not particularly good at creating scalable, sustainable solutions. And finally, what was most intriguing to me is it's an investment strategy that can actually drive better risk-adjusted returns when compared to more traditional strategies. Now, I know what most people think, because I've had 20 years of people slamming the door on me as I pitch social impact, is fake news, right? Hashtag fake news. Anytime you're going to superimpose a societal metric on a financial return, obviously you're going to do what? You're going to sacrifice yield. Because the logical conclusion is doing good and doing well have to be segregated. They cannot play nicely in the sandbox. Well, the fact is I'm in a very unique position that for the last 20 years, I've continuously proven that investing in hope doesn't have to come with a sacrifice in yield, but rather it can actually drive better risk-adjusted returns with lower correlation to the broader market indices because we're not speculating. Think about two options right now if you live in Miami. Anyone from Miami? Anyone been to Miami? I should always start with, has anyone ever been? Right now, there's two funds being offered. You could invest in Orque Perez's high-end Brickell Avenue condo fund, and he's suggesting that you're going to make 20% returns on your money. Or you could invest in Andre Agassi's and my new charter school fund to build charter schools in some of the most economically challenged neighborhoods of Miami. We're forecasting 10% returns. Now, in a bull market, the rising tide will lift all ships, and Orque Perez will probably be able to deliver 20% returns selling condos. But what will happen to the demand for high-end condos on Brickell Avenue if the Dow Jones collapses? If there is a horrible recession, the demand for that product will disappear, the equity will be eviscerated. What will happen to the demand for a high-performing charter school seat? Absolutely nothing. So when you're investing in social injustice, what you actually will do is you will underperform bull markets, but you will always outperform bear markets, and we call that alpha and diversification for portfolios. Now, before you get too excited, I need to caution you that A, social impact investing comes with risks. Risks that are unique to the underlying social issues. Number two, risks that are unique to the underlying communities where the opportunities exist. And most importantly, risks that are exacerbated by two words: arrogance and distrust. Arrogance on behalf of capital providers, because we have money, we assume we know how to tackle the issues of social injustice. And distrust from those communities that suffer the injustices of social determination, the distrust that we're just there to make money. And I promise you that the only way that you can bridge this arrogance and distrust, and the only way that you can successfully identify, quantify, and mitigate the risk is with a team of investment professionals who are diverse by culture, gender, and vocation, and who are of the community and from the community and have firsthand experience of what it feels like suffering from social determination. And it's why my firm today is 85% diverse, meaning non-white men. It's 50% women, meaning, I guess, non-men. And where we lack diversity is in our fanaticism. Our team of 100 plus people are 100% fanatical on harnessing market forces to change the world. So as many as you might know, my first impact initiative was back in 1998 with a gentleman by the name of Irvin Magic Johnson. We went on to form a series of funds called the Canyon Johnson Urban Funds, but in 1998 we were sitting in a basketball game, sitting in his floor seats, and over the din of the crowd, he looked down at me, and of course anatomically he always had to look down upon me, and I always had to look up to him. Over the din of the crowd, he goes, "What are you working on these days, Bobby?" And I said, "I'm working on an urban fund." And he, of course, his name was Irvin Magic Johnson. He heard me say, "I'm working on an urban fund." And he got that big shit grin of his. He said, "Wow, an urban fund. I am absolutely honored beyond belief. I can't believe that someone would want to do an urban fund." I said, "Well, you should be, because no one does." I said, "What I want to do is an urban fund, and if we want to call it the urban fund, that'll be great, but here's an opportunity." And he stopped me. He goes, "I understand the opportunity." He goes, "This is why I'm building Starbucks, and this is why I'm building movie theaters. You and I should partner. Let's do this together." And I said, "It's fantastic." He goes, "Well, what should we call the firm, the fund?" I go, "Well, we'll call it Canyon Johnson." And he goes, "I love it, Johnson Canyon." I said, "Canyon Johnson." He goes, "Johnson Canyon." I said, "Golden rule." He goes, "What's that?" I said, "He who has the gold rules." I said, "My gold, my firm, Canyon Johnson." He actually didn't care. The big argument we had was the next day we sat in his office, and he asked me how long did I think it would take to raise this fund that was going to be private equity, institutional capital to invest in primarily black communities in America. And I said, "Magic, it's going to take us 6 months. The fundamentals are amazing. 35% of America at that point in time was ethnically diverse, growing at 7 times the rate of the general population. By the year 2020, minority was majority. My track record at Canyon was excellent. There was huge demand, and you were Magic Johnson. It will take us 6 months." And he looked at me and says, "No, Bobby, this is going to take 2 years. I said, "2 years? Why would you think 2 years?" He goes, "Because of arrogance. Because capital looks like you, and capital doesn't understand how to identify, quantify, and mitigate the risks." So I bet him. 6 months, he bet me 2 years. Audience participation. Who thinks I was right with 6 months? Thank you. Kid need a summer job? Who thinks Magic was right with 2 years? Well, everyone's right, because it took us 2 years and 6 months to raise that fund. And candidly, it was pretty embarrassing. It was really humbling to realize just how deep the ignorance, the bigotry, and the racism that there was and still continues today in public pension funds, in private equity, in institutional capital. And fact is, we were able to go on and raise $300 million. With the first fund, we did 16 projects. We delivered, I think it was about 22% returns to investors. We went on to raise 2 more funds. In total, $2 billion of private equity capital with my partnership with Magic Johnson. Went on to facilitate nearly $6 billion of urban revitalization. And that led me to education. As a result of my struggles as a philanthropist, I partnered with Andre Agassi to tackle one of our biggest challenges, public education. Think about it. We're #1 in the world in what we spend on public education per capita. And yet, somehow, we test anywhere between 25th and 35th on standardized testing. In many urban districts in America, less than 1/3 of kids are grade level proficient. Last year, as I said before, we dropped 1.2 million kids out of high school. And that's horrible, and it's bad because high school dropouts are 8 times more likely to end up in jail, where we spend 4 times as much to incarcerate. And by the way, if they never even go to jail, a high school dropout will make $200,000 less over a career than a high school graduate, and $1 million less over a lifetime than a college graduate. So it's not a good thing. One has to ask the question, are high schools failing kids, or kids failing high school? I think high schools are failing kids. So I guess it was about 2010. Anyone ever read Andre's autobiography, Open? Anyone heard of Andre Agassi? I'll lead with that question next time. I had just read his book and come to realize that we both shared the same passion and frustration for public education and the role that something called charter schools play. Does everyone know what a charter school is? Raise your hand. Okay, so everyone knows what charter schools are. As a philanthropist, Myself, Bill and Melinda Gates, Eli Broad, and the Walton family, we put together $40 million about a decade ago to basically tackle the biggest impediment of charter school growth in Los Angeles, which was facilities. There's no shortage of kids that want to go to a charter school. There's no shortage of great charter schools, but every time a charter school wants to basically expand its footprint, they had to cobble together philanthropy. And that's very challenging, particularly in recessionary times. So over a 7-year period, we were able to build 36 schools for 15,000 kids in the most challenged neighborhoods of Los Angeles. And you would think that we would be running around the office high-fiving each other. But we weren't, because the reality is there was 45,000 kids on the wait list for those schools. We were 3 times the failure that we were the success. And in 2008, 2009, with the Great Recession, I went back to Bill Gates and said, we need more money to do this. And he said, I'm on to curing malaria. And I'm like, who the hell can cure malaria? Actually, you could. So Eli Broad was on to building his museum. And the reality is when you most need philanthropy, it's least available. Andre, when I met him, he had spent the past 15 years building his own K-12 public charter school in the most economically challenged neighborhood of Las Vegas. When I met him, he had 2 graduating classes, 1,000 kids in his school, and 100% of the kids had gone on to college. Here was his problem: 3,000 kids on his wait list. And we both concluded right then and there that we shared the passion, frustration, and when we most needed it, philanthropy wasn't available. So I went to Andre and said, why don't you join me and let's raise a for-profit fund? Because greed is insatiable, and there's unlimited amounts of greed. And if you can harness greed for the betterment of society, then doing good and doing well can be a wonderful way to change the world. He immediately was very skeptical. I was asking him to basically be a hypocrite, because his whole 15 years had been philanthropy towards education. And I convinced him that that route was not sustainable. So we went on the road, and we came across 4 kinds of investors. The unionist. Well, think about the unionist. Anyone manage money for CalSTRS before I throw CalSTRS under the bus? Anyone from CalSTRS? Okay. So I managed, at that point in time, probably $2 billion for California state teachers. And I called Mike DeRay, who was a very good friend and still is a very good friend of mine. And I said, Mike, he ran the real estate group. I said, Mike, I want you to invest in a really great new fund I have. He goes, Bobby, I love what you've done. You're one of my top investors. How big is the fund? I said, $200 million. He said, I'll take half the fund. What's the asset class? I said, well, hang on there a second. Let me tell you the fundamentals. So I talked about how huge the wait list, how it was backed by the taxing authority of the government, how there was a huge mismatch in supply and demand. This went on for about 10 minutes. He finally said, Bobby, what's the asset class? I said, well, are you committed? He goes, I'm committed. I said, do you swear? He goes, I swear. I go, do you pinky swear? He goes, I pinky swear. What's the asset class? I said, charter schools. Mike? You there, Mike? For those of us old enough to remember analog phones, you get that dial tone when someone hung up. I got the dial tone. So I called him back. I said, Mike, we got disconnected. He goes, no, I hung up on you. I said, well, why would you do that? He goes, you're pitching the California State Teachers Union on a charter school fund. Charter schools are the nemesis of public schools. He goes, over my dead body, are we ever going to invest in the fund? I said, Mike, the nemesis? He goes, yes, you're undermining the unions. I said, absolutely not, Mike. I am incredibly pro-union. In fact, I am representing the union. It's just the children's union I'm representing. And when you want to make education about adults and not children, then we're in trouble. Needless to say, the unionists weren't so good. The capitalists, George Soros, one of the greatest capitalists in the world, and also one of the greatest philanthropists in the world. We met with George, and at the end of the meeting, George says, it's laudable what you're trying to do. He goes, but I don't believe that profits and purpose should be anything other than segregated. My job is to make as much money as possible and then give as much money away. Because we had not been able to convince him that the actuality is that investing in impact can drive actually better risk-adjusted returns. He just didn't have the capacity to take that leap of faith. The third group were the communists. CIC, people familiar with CIC, China Investment Corporation? One of the world's largest sovereign wealth funds. We sat with CIC for about an hour, and at the end of the presentation, the gentleman leaned in and said, I love this fund. The government of China will take all $200 million. at which point Andre leans into the table. And I know we're in trouble, because for those of you who don't know Andre was an 8th grade dropout. He loves to say that the 2 most difficult years of high school for him were 8th grade. And Andre, when I guess maybe a month into our relationship, Andre calls me on a Sunday morning and says, I need help with math. And I said, fantastic, I need help with my forehand. There's a deal to be done here. He goes, no, I've seen your forehand. I don't need that much help with math. I'm like, okay, this is the way the relationship's going to roll out. And Andre, what's the problem? He says, Jaden, my son, has a multiplication test on Monday, and I cannot explain to him in what universe a -3 times a -3 can yield a +9, right? 3 bad things multiplied by 3 bad things, that's got to be 9 really bad things. So I thought to myself, shit, I don't know. Rolled over in bed to my wife, Lauren, who's much smarter than I am, and she goes, explain to Andre the following. If you do a bad thing to a bad person, that's a good thing. Follow the logic? I sort of did, so I said, Andre, if you do, he goes, I heard what your wife said. What's that got to do with -3 times -3? To which I responded, I actually don't know. But it's just one of those rules, one of those tenets in math that you have to memorize. To which he responded, maybe you can live your life that way, but I can't. I need to know. So now we are, a year later, in front of the government of China, who's just said they'll take the entire fund, and Andre's leaning in for the question, the obvious question, why? Why does the government of China want to invest in a private equity real estate fund focused on education in America? I kid you not, the gentleman from China looked at Andre and me and said, Mr. Turner, Mr. Agassi, it may come as a surprise to you, but your country is indebted to my country to the tune of nearly $2 trillion. And none of us at this table today will be alive to see that debt repaid. Therefore, we, the government of China, have got to rely upon the next generation of Americans to grow your economy out of the debt you owe us, and you are failing miserably to educate them. So we've got to hedge our bets. Andre's like, we don't want that money, do we? And I said, well, unless we can't find it elsewhere. And we didn't take the money. The fourth group, what we call, so again, the unionists, the capitalists, and the communists didn't work. The fourth group was the realists. And the realists were those, probably like most of you today, that when posed or presented the question, what are the consequences of you not investing in a vehicle that's going to change the trajectory for the future of America, if you come up and say it's unconscionable, then you became an investor. And those investors, what I'd call the realists, came into 2 categories. They were the evolved capitalists, like myself, or like the University of Michigan, or like TIAA-CREF, or Prudential Insurance, or Intel, who had some really, really global thinkers who managed their money and said, wow, this actually is a way to diversify our portfolio, that doing good and doing well can play nicely in the sandbox, and the symbiotic relationship between the two can drive better risk-adjusted returns. We also had what I call the Enlightened Philanthropist, which I was as well. And those are folks, typically I can't mention the names, but if it's not an Apple, it might be one of the founders of, no, if it's not an orange, it might have been one of the founders of Apple. It's philanthropists who had come to the conclusion that their givings weren't sustainable. The Rockefeller Brothers Fund out of New York, Stephen Hines, who's the president there, he did a white paper, hired Mercer Consulting to look at the $1 billion of givings that the Rockefeller Brothers Fund had given over the last century. And they had concluded that in many instances, all they had done was fund legacies of dependency. And he concluded that if and when and where there was a for-profit or market-driven solution that addressed the same issues that were mission-driven for their foundation, it behooved him and everyone involved to invest. So with the realists, we were able to raise $215 million in our first fund. And I stand here today and tell you that with that, we were able to build 79 public charter school funds over the last 4.5 years, providing 45,000 kids with the opportunity to achieve. Our school funds, we raised the second fund, are now positioned to build another 70 schools over the next 3 years. Between Fund 1 and Fund 2, we will be the 22nd largest school district in America in under 7 years by seat count. I challenge philanthropy or the government to do that in 7 years. We've changed the landscape for so many communities by acting as a reinforcing mechanism for hope and self-belief. Anyone heard of Washington, D.C.? Anyone live in Washington, D.C.? Okay? You're familiar with the Anacostia area, Ward 8. We just built an incredible K-7 rocket ship academy in the Anacostia area, right across from Woodside Terrace Public Housing. It's probably the most violent public housing project in all of D.C. In under 1 year, violent crimes had fallen by 50% in Woodland Terrace. Now, was it because we built a school? Maybe a liquor store closed down. But I have to believe that a community that has been devoid of external investments for 100 years wakes up one day and sees a brand new school and people actually believe in their community, they start holding themselves accountable for their behavior. And that's what drives the change. Oh, and by the way, did I mention that our first fund generated 9.5% return net of fees to our investors? 45,000 school seats created, 9.5% returns in a 2% rate environment. Doing good and doing well. So, while it's pretty exciting, quickly recognize that while we could do amazing things for kids between the hours of 8 and 5, if they went home to an unsafe and unrestricted home environment, everything we accomplished goes out the window. And that led us to affordable housing, what I like to call the place where kids sleep at night and jobs sleep at night. And I'm not talking about low-income housing, people that don't make enough money, people that earn below 50% of the average median income. But what about essential service providers that make too much money to qualify for subsidized housing, but not enough money for home ownership or for luxury rental? Policemen, teacher, firemen, allied health care workers, essential services. Everybody, let's not kid ourselves, everybody suffers when you don't have affordable workforce housing within close proximity to jobs. Who lives here in the Valley, in Sun Valley? What's one of the biggest problems we have? Affordable workforce housing, and this town will not survive unless we tackle that solution of providing affordable workforce housing in close proximity. Fundamentals are scary. 43 million renter households in America. That will grow by an additional 4 million over the next 10 years. 1 out of 2 renter households. 50% of all renter households are what we call rent burdened. They spend over a third of their income on rent. 1 out of 4, nearly 14 million renter households are severely rent burdened, spending upwards of 60% of their income on rent, at the expense of food security, health security, retirement security, at the expense of hope. And you know something? It's just not sustainable. So the obvious solution is what? Let's just build affordable workforce housing. The problem is notwithstanding recent increases in minimum wage, given the cost of land, construction, financing, you cannot build new workforce housing, work within the parameters of affordability, which means don't charge more than 35% of that family's income, and drive a market rate return. So that's a problem. And what's really a problem, it's almost criminal, is the fact that the existing stock of workforce housing is disappearing. Who lives in a major metropolitan area? Okay? What is happening to your natural occurring workforce housing every time it gets sold?
Turned into condos.
It's being bought by an opportunistic investor who does one of two things: turns it into condos or improves it, puts in new kitchens and new bathrooms and fixtures, and the way they get the return on their capital is by increasing rents on the very consumer who has seen no wage inflation in 30 years. Well, that's a problem, that's criminal to some extent, but it's happening, and the stock is shrinking, and it's not going to get better. And while I haven't figured out a way to build new product and generate market returns, I have figured out a way to buy and preserve the affordability. And what I do, and most people think I'm crazy to do it, I will tell you exactly how we do it, because I'm not afraid of competition. Andy and I were talking the other day, I'm afraid that there's not competition. When there's 14 million families severely rent burdened, what am I going to do with just one fund? We need to spread the gospel. Pretty simple business model. How do you make money? Who's a financier here? Two ways to make money.
Increase revenue or decrease costs?
Exactly. Well, I can't increase revenues. So what I have to do, I have to decrease costs. Well, here's what I know, because I've worked with Magic Johnson for 20 years, that the biggest expense of owning and operating workforce housing is what? What do you think the biggest expense of owning Class B and Class C properties in ethnically diverse communities is? Maintenance is one idea. What else? How about this? Turnover. Turnover is the biggest expense because when you're working 2 or 3 jobs a day, coming home to a crappy apartment in a crappy neighborhood, there's no pride in rentership. You're always looking for concessions. So our theory was, well, what if we figured out a way how to bridge that gap, how to create a pride in rentership by recognizing the need for certain essential services and lifting that pride. And if people stayed longer, you would dramatically reduce the turnover costs. So that was our objective. And I'll tell you how we do it. With every property we buy, we set aside 2 or 3% of our units, and we subsidize housing for relevant services, who, in return for providing services, we build a community. So 3 things I actually learned 25 years of investing in underserved communities is that when a family is looking for an apartment, by the way, we talked about diversity, gender, cultural, who in a family makes a decision on things like housing? The mom. Why is my firm 50% women? Because moms make the decision in housing, in healthcare, and education. So what I learned from 20 years of working with moms and struggling families is that when they're looking at workforce housing, in addition to how much it's going to cost, they want to know, is there access to great schools? Is there access to healthcare? Is it a safe and nurturing environment? So our business model is really interesting. It's the first thing we do. In any property we buy, I send Carmen Maldonado in. That is not Carmen Maldonado. That's Eva Longoria, who's my partner in the fund. But Carmen goes in 5 minutes. There's no way I'm doing this in 5 minutes. Do you want to hold me to 5 minutes?
7. 9.
I'll abridge it quickly. So we're not going to go to the really interesting stories, but what we do is we enrich each community. We subsidize housing for teachers, for healthcare workers, and for law enforcement agents. And what we've done is over the last 4 years, we have bought 6,000 units, 17 properties. To date, we've enriched our communities with 22,000 hours of enriching program. And what does that mean? It means that our tenant satisfaction when we buy our property has gone from 30% to 80%. Well, that's exciting, but unless it translates into money, who cares? Well, it does translate into money because this new pride in rentership has actually led to an increased lease duration by 14% and an economic loss by 20%. Violent crimes have dropped by 50% and maintenance costs by 75%. So we can drive great risk-adjusted returns without ever having to increase rents on the very consumer that we care about. This is law enforcement, it's healthcare. And finally, most recently, we've turned our attention to the third leg of social injustice, which is the huge disparity of access to and quality of preventative health care. Again, amazing enough, we're number 1 in the world in what we spend in health care. 18% of our GDP, $3 trillion. And by the way, $3 trillion is the entire size of the GDP of Germany we spend on health care. Yet somewhere, our outcomes are in the bottom quartile of the world in things as simple as metrics like infant mortality and life expectancy. Equally as distressing is 85% of our healthcare dollars are spent treating the elderly, chronic issues, and our elderly population is going to grow by 70% in the next 12 years. As baby boomers turn of age, today we have 42 million Americans over the age of 65. That will grow to 74 million in the next 12 years. That is not sustainable. Now, there's lots of theories of why our healthcare system's failing, and I think at the center of it, we can all agree that our healthcare reimbursement model is flawed. We reimburse healthcare providers based on volume of services and not value of services. Think about it. Historically, you pay your doctor when you see him or when he prescribes a procedure. If you don't see him, he doesn't get paid. There's a perverse incentive built into our healthcare system to keep people sick. So the good news is in an effort to eliminate this conflict, improve healthcare outcomes, and reduce escalating costs, insurers led by Medicare are moving from your traditional fee-for-service to outcome or value-based to keep patients healthy, provide treatment in lower-cost settings, reduce the need for expensive services, and that's going to go from 0% accountable or outcome-based to 75% reimbursements by 2025. Now, from my perspective, this rapid and paradigm shift from fee-for-service, from treating sickness to preventing sickness, requires a fundamental retooling of infrastructure, and that's why earlier this year we launched a fund to build out the infrastructure for community-facing healthcare, preventative healthcare clinics in underserved HIPSA communities, which are healthcare professional shortage areas. We've already opened up 6 clinics this year for 14,000 residents, and in the next 4 years, we'll be in a position to build nearly $600 million of community-facing infrastructure, serving over 250,000 residents. So all in all, over the last 20 years, I've been able to raise $3 billion of private equity capital, facilitating over $10 billion of what I would call impactful infrastructure. And while all these initiatives have generated superior returns, we've also changed the world and acted as a catalyst for change and for hope. And for me, I'm the happiest I've ever been. I'm the happiest I've ever been because I get the opportunity to achieve every day. I have an achievement, I have a job where my achievements are aligned with my values. I have the power to make real, scalable, durable change, and I get to make money while I'm doing it. And they're critical elements of what I learned on my journey 20 years ago. So, my friend Andre Agassi likes to say it's easy for most people to dream while they're awake. It's those who have the courage to dream while they're asleep. I'm sorry, let's do that again. It was that 5-minute warning that threw me off. So Andre likes to say it's easy for most people to dream while they're asleep, but those that have the courage to dream while they're awake will change the world. So I'm hopeful for the next few days where we're all here in this wonderful town of Sun Valley that we have the courage to dream while we're awake and collaborate, maybe even conspire to create some sustainable, scalable ideas. Making change, societal and financial, has never been more critical and never been more rewarding as an investor. I'll conclude by just telling you a quick story. It's less than a minute. So a few weeks ago, I had a partner from one of the investment banks in New York come to my house in LA. And like most alpha dogs, he immediately tried to establish his position in the dog pound. And as Lauren, my wife, and I were walking around our house, I kid you not, he smugly said to me, "Do you own this little house?" Right? I thought it was a peculiar question, but I said, "Yes, I do," quite proudly. He goes, "Really?" I'm like, "Okay, asshole." He goes, "Really? How large is your property?" I'm like, "Okay, Donald." In the front, okay, it's 60 feet wide. In the back, maybe it's 100 feet long. He smiled. He goes, "You know, back home on my estate in Greenwich, Connecticut, because I get up in the morning, I get into my car around 9 o'clock a.m., and I start to drive. And I drive, 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 and it's not till about 6 o'clock p.m. that I get to the other end of my property." To which I responded, "You know, I once had a car like that too." And I say that because, look, when all is said and done, it's not about what car we drive. It's not about the house we have. It's not how much money we have. It's about making a positive impact in the world. So I welcome you all to Sun Valley. I hope you found it enjoyable, but resonating. And that's all I got.